So let's go ahead and dive into the soybean market first, where we're going to start with our daily candlestick chart basis, the January contract month. And well, what I can observe here is that we are still within a nice orderly sell-off in this market. We put in a high for wave 5 of blue wave 1, nice rejection of higher prices, again, right at around that 1170 target level. And the real bodies contained within this decline, again, are very orderly. There's nothing exuberant about any of them. And we have actually produced a smaller real body in today's trade than we did in yesterday. So it would tell me that this market is slowing down the momentum here to the downside. And again, that's what you're going to be looking for in a correction and with an overall trend reversal. Now, a news headline this morning, flash sales to China, 462,000 metric tons. So again, the China is now on the market where they're finally repurchasing some, or looking to purchase some of our beans as we trade through the remainder of the year and into next year. So that's a healthy sign here in this market. So let's go ahead and break it down now. 240-minute price chart, and really, well, nothing has changed from what we discussed yesterday. We are falling out of this initial base channel, again, signaling the presence of a correction. Everything is working out quite well for a move down in A, and we'll be looking for that sweet spot move down in A to probably terminate somewhere around 11.10 a bushel before getting a small bounce in B, and then ultimately proceeding lower here for wave C of blue 2. And again, we have orders staggered there for 1/3 of the bushels at 3 different levels, 1094, 1086, and 1078. And if you do recall from yesterday's video, we did our Fibonacci retracement, and that's about where we're going to be looking for the market to pull back to ultimately before proceeding higher. Now, do keep in mind that this correction may have some duration to it, and will typically highs and lows come within the first few trading days of each new month. So there is the possibility here that we are going to bottom out in the early stages or the early days of December. But if things were to get prolonged or we were postponed maybe until around the middle of December, we do have to keep in mind that this contract will be coming off of the board in late December. So do stay tuned for any further updates or to our recommendation, as we may have to look to adjust those orders, or if things start to get late in the game, we may have to roll out to the March timeframe. But right now, definitely preferring the January. That's where the strength is in this market, and we'll continue to look for this correction to play out again before ultimately putting that low and giving way to a more extensive rally in blue 3, targeting around that 1225 number at a minimum, most likely, as we proceed higher again. And it's very common for our market, after breaking out of a consolidation, to come back and look to test some of the previous highs. So those levels are going to be right at 1072 and 1087. Really don't want to see us get below 1072 for long or on a closing basis, and that's right around where that gap area is. But I wouldn't be surprised to see this market in orderly fashion come down and test some of those levels.